Yes. Okay, so today we are doing a divergence. So divergence is when price has tested an entry zone. If price is supposed to sell off a point of interest, then it decides, instead of just selling, it comes to that zone and sells for a short period before it starts buying correctly, right? It's more like liquidity grab. So today we are going for boom 1000. Ooh, okay. So today we are going for boom 1000 on the hourly time frame. So the divergence, we just left it here. Okay, the chart is choppy, but it's right. Choppy thata. Okay, so I'm going to go a little bit back so that we can look for a good divergence here. A good example of a divergence. So when we are trading, we have confluences, right? So on these confluences that we have what we call the stop hunt. The stop hunt is when price decides to take out stop losses first, right? 1,000 let me go maybe on a 15 minutes time frame. Why is it choppy today? Okay. So let me give you an example, right? So here we had a break of structure to the upside right here. Right. We had a break of structure to the upside. And then this is our swing high up here. That's our swing high up there. It's not really the case at the moment. So what you would do is you would expect to find a confluence where you take your buy, right? For example, there is a good breaker block here. Then you decide to use this breaker block to enter the market, right? So you enter your market, you enter the market right here. This is where you buy, and then you target the swing high like that. So in this case here, price hits your take profit, right? But you expect it to break to the upside. Now, the thing is, your stop loss should always be below the swing low. So if our swing low is here, if this is our swing low, then that means that we need our stop loss to be right here. Yeah, like this. So then price decides to come into your losses. So those who have early stop losses above the swing low are going to be stopped out when price comes back to this zone here, right? To this zone here. Then why did price come back to this zone? When you look carefully, you can see that a QML was formed in this zone. Let me mark our QML block like this. When I mark it like this, you can see that it was not filled. That's why price had to come back and fill it, then quickly return to the upside, right? So when you look at the second buy and the first buy, I'm going to show you the difference between the two, but it's pretty visible. Yeah, if I make it like this, it's going to be much better. Okay. Now, looking at the two buys, the first buy took long to reach the take profit, which means there was not enough momentum, right? So the lack of momentum in the market means that price was not supposed to buy from that zone, the first zone. That's why it decided to go and buy from the second zone, right? There was a lot of momentum on the second buy because all the confluences that lead to a buy have been cleared, right? They have both been cleared. First, it cleared the breaker block. After it cleared a breaker block, like QML. If you had your buy limit and then you feel for a price higher, it decided to come back and trigger your buy limit, and then that's when it starts to press to the upside. Now, our divergence, we mean when price creates the first low and then the second low like this. This is what we call a divergence, right? It stopped out the early buyers and then the actual buyers have now entered the market, right? Then again, I'm going to go a little lower here. We had a break of structure to the downside here. This is our short break of structure to the downside. And then we had this as our swing high. And then again, price created this is our swing low right here. This is our swing low all the way down here, right? Now on our swing low, it seems to have been broken, right? Now I'm going to go further back. Okay, this is further back enough. Maybe let me go to but that wouldn't help. Maybe you can see, but anyways, for example, if we want to buy off from this zone here, we are trying to buy off from this zone. Remember, the reason why price always comes a little lower is just to take out the stop losses, right? Which means if you have your stop loss too early or too close or in the entry zone, price is going to take out your stop loss, right? So let me mark. These are the first buyers going into the market here, right? These are the first buyers going into the market, and then price decided to come and break the entry here, which means since this is a 15-minute time frame, for example, let's say it bought and you were sleeping. You slept early, you woke up late, but you had the trade running. You are going to find yourself, maybe the price has come back and you find it in losses, you panic, you try to protect the account and you close trades, and then it starts buying again. That's what the market does. It manipulates, right? Then now it's not like price is still going to push down after breaking the previous low. It's a divergence here. It's a divergence like this, like that. So that's a divergence. In other words, that's the stop hand. And then now what I wanted to show you guys is a pattern that is called the W. Some says the W and the M. So it goes like this. Then like this. So that is the W, right? That is the W. It ends here. Oh, okay, let me mark. Our W is marked like this. something like that. So now our W is complete. Now our divergence is below, it's down here. This is our divergence. And then when you look at these two lows on the chart, these two lows are in what we call an entry zone or a point of interest. They are both valid, just that the first one would go in early to manipulate, and then the second one would make it look like price no longer wants to go to the upside. Then price absolutely changes and decides to go even higher, right? So our divergence is down here. And then this here would be our re-entry on the breaker block right here, right? So that's our W. And then now for the M is also in the same pattern or in the same form, but upside down. It also has a good divergence to show the market before the market decides to push to the downside, right? So when we look at the M would start here like this. This is the M. It's 5 key points or 5 key values, right? Now the fun part is that price always comes back to its divergence. Why would you call when I'm in a Zoom? No. Anyways, that's the M. And then what did I do? And then this is your re-entry, right? This is your re-entry right here. Like this. This is your re-entry here. And then for your divergence, we would say your divergence is up here. Like that. This is your divergence up here. Right, let me remove this. Yeah, your divergence is like that. So it's almost the same thing, just that MYA upside down, right? It's just the same pattern, and then some call it the butterfly, and then some have another name for it, and then some even feel like it's a head and shoulder, but nna ke rata head and shoulder e normal, ga ke batle dilo tse di akanyetswang, right? So going back on the chart, we were here. We noticed this buy, for it to have taken place, we had a good divergence here, right? Price then created here a nice resistance here. This a support and resistance consolidation here. Price came down. When we look at it even further, when we take it to another level, we break it down even further, we can say there is a QML here, which price came back to trigger one. That's QML1. Now we don't look at QML like this, but we used it because we wanted to use it, right? How do we use it? In this case, we take this low. We take this low here. Then we are going to have a good and a clean divergence right here. Right. Now the early buyers used the smaller time frame, what do you call it? They used the smaller time frame QML. Then the big boys or the main buyers used a different or the actual or the correct what do you call it? QML, right? So there is a QML is siameng. Then in this case, where is our divergence? Our divergence is in the first entry and the second entry, right? Like this. So motho mongwe ta ba go rare price ile a breaka structure ke e breaketse structure go godimo. Let me mark here. Someone would say price broke structure to the upside here, like this. Now the problem with this break of structure is that this low was not broken, it was a divergence, right? There is no momentum breaking price to the downside, which means this high is not valid, which means this low here, hold up price. The low that's capable of holding the price is this lower low, the one in the divergence, which means it's safe for us to use the QML to get an entry, right? I hope I'm not complicating this. Then now let's use a divergence to find a sell opportunity. Okay. I'm gonna clear the chart completely. Now, looking at the previous trend, which was the downtrend, we had this low here as our swing low, right? Now, our swing low here, price sold off from it here. Then now the problem is that looking further up, we had a breaker block here. This is our breaker block right here, which also needs to be filled, right? This is our breaker block here. Then the breaker block was filled and then price decided to go down directly like that. You see, now the difference between this the entries is that you'd find a sell opportunity a swing high or a protected high, and then on top of it, a breaker block. Anticipate price to go to both of those areas, right? The first one and then the second one, because it doesn't want to disrespect. So it respected this low, and then who respected this low, it created a double top. So this is a double top right here, like this, double top like this. Now, double top area liquidity. So now this is liquidity, which means price has to clear liquidity. While price is clearing liquidity, it's a breaker block jwa rona jo ba ga godimo a bo e bo cleara le bone, right? So it really a double entry high clear this liquidity, which leaves us again with a double top here, which is liquidity again, right? I created liquidity on top of liquidity, right? Which means a price will be yet to buy again. Now, our divergence, to mark our divergence here, we mark our divergence as this two here. Our first entry on the first net, what do you call it? Confluence, which was the strong high, and then a re-entry on the breaker block, right? After a market, I mean, yeah, a small time frame or a lower time frame market shift or an internal trend market shift, right? So that's how a divergence works. It's not hard. It's pretty simple, especially how trader model the women crash in there is a divergence multiple times to stop you out, right? When you are using a Fibonacci retracement tool, maybe you are trying to catch the 61.8 or the 38 or the 23, price is still going to manipulate in order for it to come a little bit lower, even if you are using the 50% zone. For example, we have this high here. This is our final high up here. and then we have our final low with the final low. Let's say this one, right? Now price this can't be. It has to be this one equatas. Yeah, this ones I don't know what they are. Now when price we are using our Fibonacci, we are trying to catch the 61.8 zone, right? The 61.8. Before I set it down, I gotta catch a break of structure. We use the 61.8. Now watch what happens. So I'm going to pull it from up here all the way down here, right? Okay. So now price here, say see the reeling. Let me mark our 61. Here it filled the 61 zone here. This is the 61.8. That's it. It was cleared. Now we had a liquidity here. This is liquidity. This small divergence, there was a divergence here which led to a clean buy, right? This small divergence, price has to come back to its divergence like I just said. That's why price is still in an entry zone. So price abo ebola its divergence. Like I always say, guys, price will always come back to its divergence. Abo as a re-end. As you can see here, price decided to come to our divergence, entering at the 38.2 zone, right? That's when the price can come back either to the 61.8 or the 31, or I mean the 38.2, like that. So that's how you analyze the market without suffering from chest pain or stress or anything, right? You just go in the market. Remember, I think most of you already understand how to use trend lines. We'll do it again on another lesson since we are now on YouTube. Now, but the trend line here, this is a good entry here. And then now, if the relay breakout, you use this resistance here as a breakout and retest, and then you buy it from there. I don't catch spikes, otherwise I would have bought it, and then price would have to break the swing high. It's a continuation pattern like that, right? So that's how you identify divergence. Again, we have let me pull my Fibonacci. My Fibonacci, I'll pull it from here like this to the upside to see where price had to retest after pushing to the downside from this zone right here. It pushed it and then it came to this zone here, Then when you go to this zone here, it relay retest to the 61.8 since we are catching the trend and the trend wasn't starting, it's continuing, right? Then let me delete my Fibonacci like that. So that's where our entry is. And then again, we have a hidden QML here. We have a hidden QML here like this. Price decided to come back to it. Now we remove this, and then now, like I said, this is our divergence. And if you don't believe me when I tell you that price always comes to this to its own divergence, let me mark the zone like this. It can clear the divergence without respecting it, but commonly it respects it before a ralal. As you can see here, price e palwa ke go break our divergence zone right here. As you can see, I'm not talking about things that I do not have proof about. This is what happens with divergence, right? So you have to go and learn about divergence, or you have to watch this video again and understand more on divergence. If you want to learn more about divergence, I am your guy. If you learn divergence from YouTube, then they will have to ask you to use moving averages and other indicators like MACD, right? But that's how you use your divergence or a stop hunt, right? It's another way. If you are trading SMC, it's a stop hunt. If you are trading pure price action or systematically, a systematic trader uses indicator, right? And often they analyze in a different way than any other trader. So now I'm a systematic trader, a pure price action trader, SMC trader, ICT trader. I mastered all of them, then I choose the best from the rest. So that's how you use divergence. Make sure you hit the YouTube page and then you watch more. Make sure to subscribe so that you don't miss anything. They always drop at night every five days a week, working days, Monday to Friday. You make sure you catch the video, you watch it again and again until you understand, you backtest every single day. You make sure that something starts and ha o lebelele hela bore go tsene ke ta bona nako ke ta bong ke fundile. Ha o fundile ha o ka kwana le patience, and then already o utlwa signal e tsena e betsa ka go groupung wa tsena full margin, half margin, wa risk ya go shapa, and then you only funded because you wanted to test the divergence, though demo account elite. So make sure you make use of your demo account, right? Make use of your demo account, and then what you do with your demo account, you learn divergence from it, you learn break of structure, QML, and everything, the trend lines, right? You learn from there. Otherwise, that's it from me today. I will see you again tomorrow, same time, same place. Today I was late. I had a pretty long day, so I was still finishing up with my pens. Thank you very much for joining.